Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 17th of June, 2023, and it's the weekly technical analysis for spot gold and dollar yen for the third week of June. And looking at these two inversely correlated pairs, the spot gold did attempt to break out lower, but managed to find support at the 138.5 extension and recovered back into the consolidation area, while the dollar yen did manage to break out higher from the descending triangle and continued to rally on Friday with the Bank of Japan's policy decisions and their dovish comments, so which drove the US dollar higher against the Japanese yen weakness. So let's see what the other main drivers were for last week and what to look out for this coming week to see whether these patterns will continue. Spot gold in the consolidation mode, while dollar yen is in a breakout mode. All right. So last week, the Federal Reserve did pause and but however, in their statement, they did project additional 50 basis points of increase before the end of the year. So likely another 2 more rate hikes. It could be next month in July, and it could be another one in September. But looks like there is not going to be any rate cuts this year, so they are still motivated to bring the inflation down to 2%. And that was even with a slightly lower than expected CPI and PPI readings just a few days before, just a couple of days before that. The Fed is closely watching the PCE price index and the jobs situation as well, which is still fairly strong. UK reported strong jobs and met their GDP expectation. So this will be a concern for the Bank of England this coming week. And then on Thursday, the ECB, as expected, did raise interest rate by another 25 basis points and did not indicate any possibility of a pause anytime soon. So they are playing catch up with the interest rate with the Fed. So with this hawkish decision, it was very bullish for the euro, and it pulled up the rest of the majors as well at the expense of the US dollar. So the markets took advantage of the pause from the Federal Reserve, but we'll see how far they can push up this coming week. And especially on the Friday, the Bank of Japan sounded dovish and weakened the Japanese yen further. So the dollar against Japanese yen took advantage and climbed up on the Friday. So this week, we'll be looking ahead at the UK CPI with a slightly lower forecast than the actual for the previous month. And in fact, the previous month was higher than expected. So it's still fairly high. It's still the highest among all the major economies. So the rate increase is more than expected at the with additional 25 basis points, and the pound could have been the cable could be already moving and pricing in that rate hike decision. So it could be possible buy rumors, sell the news scenario. And also this coming week, Wednesday and Thursday, Fed Chair Powell will also begin his testimony. And there could be some fundamental news that could trigger volatility and in the markets as well. So have to be careful during those times. And then by the end of the week, there's all the major economies flash manufacturing and services PMIs to give an early indication. So those are the major fundamental news this coming week, and we'll see whether there's any pause in the rally in the major pairs and whether the US dollar has found support for will find support for next week. All right, let's move back to the analysis. So let's begin with spot gold. Where it was not able to climb up higher above the 1975 round figure and this resistance zone, so which has proven to be a very stubborn resistance here. And also the swing low at the 100 pip has maintained a strong resistance level here as well. And until the Thursday, where spot gold did dip lower past this area of support, interim area of support, and just to hit the 138 pip extension. So it was looking bearish until it found support, and right at the time of the US trading session, and as well as the ECB rate announcement, where they did increase rate and was a hawkish move. Even after the pause with the FMC, with possible future 50 basis points rate hikes coming up as well. So initially it was weakening based on the US dollar strength, but then after the ECB's announcement, it turned around and flipped back up and recovered back above the 1950 and attempted again to retest the swing low, then ultimately closed as a doji on a Friday and back into consolidation territory again. So this is turning out to be a stubborn zone of consolidation, and the support zone is still valid as well, along with the resistance zone above that. So about 380 to 400 pip range. And if it does attempt to break out higher, it needs to break through the 1975 to climb back up into 1990 territory near the 786 retracement. If it does break down below the trend line and the 1950 again, and if it does break the 138 pip retracement, then it exposes the 162 pip extension, sorry, at the close to the 1900 level. So I think likely it's still going to stay in consolidation mode, either within this ascending triangle or in a rectangle box here. And this week, we'll see if there's any trigger from the US with the Fed chair's testimony and Friday's flash PMIs. Otherwise, it may just continue to consolidate into the following week, the final week of June. On the weekly time frame, it did close as almost a doji with a long lower wick. So still consolidating. Okay. Let's compare this with the US dollar index, the DXY, to see whether it's similar in the inverse fashion. All right, here's the DXY. And the breakdown was on the Thursday, similar to the euro. After breaking below the daily 55 and the 62 fib or the 38 fib retracement area here. And it started the week, it was unable to break above the daily 200, where the 786 retracement was, and started to fall on the Tuesday and Wednesday with the FOMC decision, but finally gave way on the Thursday and right back to where it broke out from this ascending triangle. So this is at a critical level now. So it's back to the 38 fib retracement. Now, if it's if this was the high and a retracement back down, now that's going to be the 62 fib retracement. So we can also update that fib to show the recent retracement here. So let's flip it around. All right, so it's coming back. It's come back to the 101, just below the 102 level. And let's extend this area. And perhaps also extend this trend line to see where there's trend line support there. Right there. So it's right at the corner. So that's a critical support level now. We could also bring it down to the 786. And an interim support area here, the 62 fib. And intermediate resistance at the 38 fib. Then the major resistance is still at the 21 fib area, along with the 200 EMA. All right, let's also take a look at the weekly time frame and also looks the inverse of the euro. But now it's sitting at a key support level. So we shall see whether this is going to turn out to be a morning star with this small spinning top and recover back up into the 38 fib or higher. If it does break down, then that's going to be a critical support area at the 786 and even could spike into the 101. Okay, so critical week coming up for the US dollar and the euro especially. as they are inversely correlated, and these are the main drivers for next week in fundamental news. But otherwise, it could be basic demand and supply for next week, and price action. So watch out for the volatility. All right, so let's move back to the other major pairs. Let's move on to dollar against Japanese yen, where it had already broken out higher on the Tuesday with the CPI news from the US, and it was a strong bullish move higher, even though the CPI figure was slightly lower than expected, but still elevated, which will be a concern for the Fed. And then on Wednesday, the Fed did pause and initially weakened the US dollar, but against the Japanese yen managed to recover, continued higher on the Thursday, but a strong pullback on Thursday, forming an inverted hammer, right, with the 162 Fib extension as a resistance level, but that didn't last long with the BOJ's announcement on Friday and a dovish stance, and dollar broke through higher, almost reached the 142. Has not hit 142 yet, but it's and almost targeting the 200 Fib extension. So that's the major resistance zone there. So we'll see this week there's going to be a pullback, retracement lower, and whether there's going to be any attempt to break out higher from these US news coming up, whether it's enough to be a catalyst for further bullish moves. On the weekly time frame, that's definitely a bullish move here, and that's looking like a rising two methods with the Harami the previous 2 weeks. That was the breakout from this Harami here. So there could be some bullish momentum to carry it through, but we'll see how far it can get until a retracement. So at the moment, it's still a significant resistance here. If support, that's where the rising two methods, the two Haramis, or rather the Harami on a weekly time frame, was finding support of the previous highs, swing high that was broken. So I think it's safe to move this support level, key support, to along with this area of support. That's going to be the major support zone with the swing high at the 100 Fib, just below the 138 round figure. It could be interim support at the 140, but let's see if it pulls back that far, and whether it goes even further back to test the 138 Fib. But 140 is definitely going to be a psychological support level now. Okay. All right, so do check out my other videos on the other major pairs and have a safe week and a good trading week, and cheers for now.